Pleasure.
I think this is an exciting time. First of all, the market's at records. I mean, I know that the Russell and the Dow Transports are actually in correction, but when you look at the rest of the indices, we've seen some records, despite the fact that everybody is worried about everything. I mean, starting with second quarter earnings, right? What do you think of that?
Well, first off, thanks for having us. Second of all, when 30 years ago when I got in the business, my first mentor was William O'Neill, and William O'Neill and Company Investors Business Daily.
Yeah.
Say, Brian, people are going to tell you that there's always something going on in the market, and it's not different. There always seems to be these topics that we want to talk about. I think, from my lens, doing this for so long, we've been blessed to have the perspective, and the perspective is this, Nicole. People are negative. Negative, 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 negative. I haven't seen this, and I'm not trying to grandstand or not trying to make headlines. I think people right now are as bearish and as nervous as they were in 2008, 2009. And here's why. You have this confluence of events with respect to, all the negative macro data, supposedly. Right. The rest of the world's going in the opposite direction of the United States. Meaning we believe as an asset, actually the U.S., is a home for stability. Earnings have actually started to settle in. They're a lot more negative 2-3 months ago as revisions were a lot more negative. So, I mean, listen, I think you got to put your money somewhere. And we've had a 37-year bull market in bonds. We've had this unbelievable bull market in stocks the last 10 years. We made the call in late 09, early 2010 that we thought U.S. stocks were entering a 20 to 25-year bull market. We still believe that. People thought we had 3 heads then. They think we still have 3 heads now.
Yeah. Well, I like it. I mean, I like the bullish perspective. Truth is, while everybody else is cutting or they're concerned about global growth, right here at home, we have, great numbers for employment, right? People have jobs. We just got the JOLTS number. It was down slightly, but it's still near records.
Listen,
I mean, as far as there's plenty of openings for the people who don't have jobs. That's a great sign.
Yeah, the Fed, whenever we're going around talking to clients around the world, there was this talk that the Fed was going to cut by 50 basis points. Ridiculous. Absolutely ridiculous. How can the Fed cut by 50 basis points, Nicole, if we're at record low unemployment and earnings have been steady, GDP has started to be steady? We're just so incensed with the rest of the world being lower for longer in terms of this interest rate scenario.
Yeah.
And we think that if you kind of go back the last few years, people left the United States after President Trump won. And then people left the United States even more after 2017's performance. We have had 3 straight years of outflows relative to inflows in equities. We believe that people are going to come back as reluctant buyers of U.S. stocks the next few years in this Goldilocks scenario.
Yeah, and the S&P is doing great since the election.
Exactly.
I mean, it's up like 50% or something. Let's get to some of the sectors here. I know that you have a bullish perspective overall. Bank of America, some of these financials, many of which begin to report next week. What are your thoughts on this group?
I think you have to think thematically for each sector. I think you'd be doing yourself a great disservice by just buying a sector ETF right now. You want to have themes and have tracking error. So what does that mean? Our primary theme for financials are scalable businesses, meaning the money center banks, asset management, meaning wealth management, and commercial banking. We think those 2 areas in particular, wealth management, commercial banking, will be very strong. We also think, and we know, that Bank of America remains one of the most hated stocks in the world.
Right.
The majority of investors own Citigroup and maybe a little BlackRock and JP Morgan.
Yeah.
At the most. Bank of America, they've stayed away. So we think the strength of Bank of America going forward is clearly the wealth management division in terms of Merrill Lynch.
We think a lot. One.
It's the forgotten.
It's the forgotten one.
Bull.
Yeah. So on Monday we'll hear from Citi, Tuesday Goldman Sachs, JP Morgan, Wells Fargo, and Bank of America on Wednesday. So we'll get some more clarity there on those. What about some of the others? Costco, Visa. You had those as something to focus on.
No, these are. We have the very good fortune of running real live money portfolios, 5 in Canada and 2 in the United States. So we put our money where our mouth is, and I'm talking about 3 of our biggest positions. So Bank of America, Costco, and Visa. These are longer term, 5 to 7 year holdings that we've held in the portfolios.
Well, the Costco Visa really sounds like it counts on the consumer.
Well, they are.
A strong consumer, people are out shopping or they're using their Visa.
I'll take it a step further, though, from just tracking error with respect to how these stocks fit in specific sectors. Remember, Costco is technically a consumer staple stock. If you take a look at the fundamental construct of the consumer staple sector, there's a lot of fundamental issues with food stocks. In terms of capacity, and the millennials aren't buying things, aren't buying brands like, let's say, you and I used to buy brands. Millennials don't care about brands. And so if you take a look at consumer staples in particular, Costco is a very important stock to own within that framework. In terms of Visa, Visa's been a juggernaut within the technology sector that actually diversifies yourself out away from more riskier / volatile stocks like semiconductors, but the earnings power of Visa, MasterCard, MasterCard, those types of names. The horse that we picked was Visa.
I have had on somebody who loves Square and said Visa may get really hit hard with something like Square, or Visa was a little spooked by Libra, Facebook's Libra. So what do you think? Not worried about those
No,
things.
I think fintech is very similar to alternative energy. What do you mean by that? You know, the big energy companies are the biggest spenders in terms of R&D for alternative energy.
I see, okay.
Just like the banks are going to end up buying the fintech companies.
All right, S&P 500, 3,000, right?
3,000 is our target.
Not that far.
Yeah,
3,400.
Belski, give me something.
Give me something.
Give me something. Well, our bullish outtake would be 3,400, and we've said that for a while. We think the market could see 3,400. 3,000 is, I think, is doable clearly, but we do think that we're going to see some volatility in the market in this summer. Hopefully, people are going to take a little vacation finally and settle into the fall, and then maybe we'll have to recalibrate things. But we think the market has upside to 3,400.
And when's that? In a year?
Well, listen, I mean, I still think that
timeline?
Listen, I still think we have 10 years left of the bull market. 10 years left.
Right.
We are going to have a recession at some point. Yes, we are. I don't know when and how that's going to happen. It's not now, though, because when everyone's looking for a recession, we typically don't have one.
Yeah, the contrarian, right?
Exactly.
The one, since everybody's so nervous.
You can be contrarian, Nicole, if you have the analysis to back that up, and we think we have the analysis. We recess from higher levels of GDP when we see frothy growth. We have far from frothy growth. This has been the longest, most boring recovery in the history of recoveries. This is not frothy. We are still scared of our own shadow.
It's not boring if you're making some money.
It's not boring if you're making money owning stocks, that's for sure.
That's right. Brian Belski, Chief Investment Strategist at BMO Capital Markets. It's great
Thanks
to see
for
you.
having
Thanks
us.
for coming on. Come back soon.